Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, July 26th, 2023. Before I click on the charts, just want to encourage you to please click like if you haven't already. Please become a Wicked Stocks YouTube channel subscriber, following us, and share the content if you would with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% swings on those stocks. And we offer a 5-day free trial with your payment gateway. So you sign up, you get 5 days, no questions asked. If you want to bow out within 5 days, you can, and your card will not be charged. Anyway, that's what we've got for today. The Daily Tesla Report, Wednesday, July 26th. Let's jump to the charts. I've got once again, we stretched through the 290.33 channel top that stems off that January low. We need to close above that at the end of any week by a 1% margin for a full and complete buy signal that should then yield the 414.49 November all-time high. I'm going to say by the end of the year, 3 to 5 months or so, I think is realistic. When we did settle several months ago above the 185.55 18-month channel top, I mentioned and still hold to a 414.49 objective over the next full year. It's just the problem is if we cannot close above 290.33 on a weekly basis, we can fall back within a couple of months to this channel base that is presently in the 190s or low 200s, and you've got 185.55 as well. So we could fall back into this zone, say by the end of September or sooner, as long as we're unable to close above the 290.33 channel top at the end of any week. Let's zoom in here now and take a look at the daily chart. That this is still our zone of support. 259.12 is the rising 1/3 speed line that did manage to snag the low so far, and that was put out on Monday, came back to close higher on the day. And we also have this channel bottom at 264.32. This was the level that we did settle just below last Friday and opened below on Monday. Tested the speed line, rallied back to close above both of them on Monday, and now Tuesday we eased back toward 264.32. It is 264.32. If you look to the right, it is an intraday support level that can contain intraday weakness, and above which we can, I'll jump to this chart here, reach 276.71. Another upside Fibonacci level. 276.71 is a 50% upside retracement over the last week. Holding above 264.32 will keep that 276.71 level in reach today. We could trade inside 264.32 to 276.71 for a good part of the day. But if we break, or open today below the 264.32 level, once again anticipating 259.12, where we can bottom out for the week and from here rally back into the low 290s again over the next week or two. I've been saying that now for the last few days. Holding above 259.12 will keep that 290.33 long-term channel top in reach. Now, I'm going to say by the end of next week because it's not much of a rally. It's right around here where that 290.33 level actually is. Now, if we close today below 259.12, that is a downward pivot as we move into August trade. I would expect 238.52 within a matter of 3 to 5 days. And over the next 3 to 5 weeks of closing below 259.12, this 200.10 rising channel bottom in reach. That would be, say, if we close, say, this week below 259.12, we could actually test 200.10 by the end of August, where we could bottom out really through the rest of the year. 200.12 is really considered the start of a wide zone of long-term support down to 185.55. And you could see the same rising channel bottom on the weekly chart is at 200.61. So yes, if we close below 259.12 today, which is once again here, if we close it below that level, you could reach for those 200 out of the money puts rather that don't expire for at least several months. That would be the play if you're kind of a big picture options trader, position trader. I don't think, if your time horizon is 3 to 5 weeks or a couple of months out and you're long Tesla, and we close below 259.12, you should strongly consider exiting, covering that position, at the very least, neutralizing it. And if you can go short, and if you're comfortable playing both sides of the market, and if you trade options, for instance, you could reach for 200 out of the money puts that don't expire for at least, I would go a couple of months out on that. Until then, this is sort of a two-sided framework now between 259.12, our floor of support for the week, and above which 290.33 is likely by the end of next week. Now, I have 259.12 as a 4-star support level, as I've been mentioning, not so much because I think it can contain selling over the next several weeks. I think it's good for the week, but because if we close below it, I think that indicates a 3 to 5 week sell signal into the very low 200s. Until then, it's a bit of a battle, if you will, between 259.12 and the 290.33 channel top on the weekly chart. We do need to close above this formation at the end of any week by a 1% margin. Let me give you the conditions now for the upside. I don't think I covered that fully, and that is to say that if we do push above 276.71 today, we should intraday test 281.41, this former channel bottom that can contain daily buying pressures, and that offers day trade opportunities and potentially 3 to 5 day swing trade opportunities, because we could top out here and fall back. Remember, we are still trading below the 290.33 long-term channel top, and so the emphasis remains one of prove it to me. In terms of upside, longer-term bullish continuation, as I say, holding below 290.33 will keep the market in reach of this, upper 180s to low 200 area over the next, couple of month or two. And that's I think I've said that enough. Let me go back to this chart. 276.71 likely to contain intraday strength, below which 264.32 remains in reach today quite easily, where we could bottom out intraday. If we break or open below 264.32, then once again expect 259.12, where we can bottom out for the week, and above which, this is a 3 to 5 day swing trade opportunity, 1 to 2 week position trade, testing 259.12. We'll keep 290.33 in reach again by the end of next week. So if you're an options trader, or you just, you're a swing trader, you buy 259.12, hold out for 290.33, and that is really the play right now, near term, into next week. And once again, closing below 259.12 does set off a 3 to 5 week sell signal. I will still emphasize the possibility for bearish rotation on a couple of counts. So just remind you that not only did we push through this channel resistance, but we also closed below it. And at the same time, last week, we put out a key reversal high, that new move high following the January low, closing below the previous week's low, also considered a bearish engulfing pattern in candlestick talk. So that is still in effect, actually. We are still in the week. If we close higher on the week, it is a bit of a neutralizer, but I will say that the market may well close below 259.12 based on that key reversal high. So be careful. I wouldn't stay long below 259.12, whether you're a 3 to 5 day swing trader then expecting 238.52, or a 3 to 5 week position trader then expecting 200.10. If you're a long-term investor, ultra long-term, you're buy and hold through the rest of the year no matter what. Well, I'm not really talking to you, but I am talking to those who are uncomfortable holding a losing position for more than a week. Because closing below 259.12, I think the writing is on the wall. That key reversal high that played out last week may well have its way back into the low 200 area as we move into August, September. I'm going to leave it at that for Wednesday's Tesla. Please click like, share, subscribe, and check out wickedstocks.com.